Welcome and thanks for joining me. My name is Tom Sommers with Coldwell Banker Burnett, and I'm a licensed real estate agent in the Minneapolis-St. Paul metro area. Today I'm going to answer the question, are there hidden fees when buying a home? The short answer is no, there should not be. But it doesn't mean that there aren't people in my industry that will try to take advantage of you, as well as in the banking industry. So some of this falls on your shoulders to be careful about who you work with. All of us aren't created the same. So you have to ask a lot of questions to get a feel for who that person is and how they do business. The loan officers as well as banks have a lot of strict rules, regulations, and laws that they have to follow as well. But it's amazing how some people can make the numbers dance. So the more you understand about the process, the smarter buyer you will be. I'm going to cover just the basics today to give you a rough idea of the fees that are included in the purchase of a home so that you have some familiarity with them if you've heard the terms before. The first one is down payment. Now let's take a regular scenario where a lot of first-time home buyers would use an FHA loan, which requires 3.5% down of the purchase price when buying the home. So if you were purchasing a $200,000 home, you would need to bring $7,000 or 3.5% to the closing table when you're signing the paperwork to buy the house. In addition, there's closing costs. These closing costs average about 3% of the purchase price, or an additional $6,000. So you'd need a total of $13,000 to buy a $200,000 home. Now, this doesn't mean you can't roll closing costs in and all of that, but we're not talking about that today. I just want to give you basic fees. The closing costs are divided up in half for the most part. One half of it goes to the bank and loan officer for loan origination fees, to check the PID, to make sure that the information for the legal description is correct, for the closing and title company to do all of their paperwork to get ready to close the house. The other half is escrows. It's not money that's given away, but you have a bank that will establish an escrow account in your name for taxes as well as insurance, so that twice a year they take the money out of escrow and pay those fees for you. There are other fees like a home inspection, which I always recommend that a buyer do. They run around $400 to $500 for a professional who will come in and look the house over to make sure that you know that the home you're purchasing is in sound condition. If you're buying a single family home, not a townhome, you will also need to bring what they call insurance binder, or 1 year worth of homeowner's insurance to close, which in something like this with a $200,000 house, you're probably looking anywhere between $1,400 to $1,600 depending on what type of coverage you're getting. Because that first payment you make after you buy the house is 1/12 of next year's homeowner's insurance and property tax. They will also take some of the money in that closing cost to establish an escrow account for your property taxes as well. So when you see or hear the 3%, it's not like that just evaporates into thin air. About half of it is fees, but the other half is literally establishing an escrow account for you for the purchase of the home that is money basically in an account for you that you could access if need be. Like if you sell the house, you'd get the remaining balance back. Other than that, that's about it. There is a broker administrative commission that's charged. Coldwell Banker right now is currently $499. Most of the brokerages charge this fee. It's something that's typically rolled into your closing costs. And depending on the type of loan you get, sometimes you will have to pay your appraisal fee ahead of time, but sometimes it's rolled in. But that's about it. There shouldn't be any additional closing costs or fees or hidden fees or last minute rate changes. So you want to make sure you get everything in writing, and you want to make sure that if you're shopping for loan officers or lenders, compare those breakdowns, because sometimes they'll tell you they're giving you a better interest rate, but in reality they're charging you more fees on the other end. So at the end of the day, sometimes that lower rate isn't always the best deal. Sometimes it is, sometimes it isn't. So you want to make sure that you understand why you're being charged what you're being charged. I hope that this helped answer a few questions for you. If you have additional questions, please feel free to give me a call. You can text me, email me. My information's on the screen. I am in the Minneapolis-St. Paul metro area, like I mentioned, Tom Sommers. Thank you so much for tuning in, and I look forward to speaking to you soon. Thanks and have a great day.